Today is Friday, February 9th of 2024. We did a couple trades here as you see our main option trading account. The first one is our naked SPX call position. So focus on the top portion here, which is rolling the February 29th $4,900 naked call options out and up to April 30th, $5,770. And that cost us $33.30 per share for those three contracts. In order to help pay for that, we added one more contract in a separate order by selling the SPX April 30th 5,070 call option for $100.70. So we have to look at this trade all together. I tried to get it all filled as one trade, selling 4 and buying 3, but the order just wasn't getting filled at a decent price. I decided to break it up, and then we did get it filled, as you see here, at a fair price. And the reason why I decided to go ahead and roll this out, now theta or time decay was higher on the February $4,900 call option, but I wanted to get delta back in our favor. And so delta was starting to creep up on us on this $4,900 call option that expires here in about, 20 days or so. And so now that we're out of the money again with this April short call option, then the delta is more back in our favor. So theta is not in our favor as much, even though it is still in our favor, but delta is more in our favor. So this is the chart of SPX, but I'm actually going to switch over to the spider, SPY. And just kind of, again, notice that we are in a very strong uptrend on the daily, weekly, and hourly charts. So all charts show bullishness. Do notice that we are at the upper part of that upward sloping trading channel, at the very top of it. The top of it you can't quite see here, but we're at the very top of that upward sloping trading channel. Notice also that volume kind of declined after Wednesday of this week, yesterday and today, Thursday and Friday this week. The volume was definitely lower and really more on the lower side. It's some of the lowest volume we've seen going back. Really the only lower volume days is back here in around Thanksgiving. So very low volume. So Julian told us that buyers are probably starting to get less interested in buying, but we'll have to see because it is a very strong bull trend. So at some point we do expect it to retrace and at least test this area for support down here at the lower part of this trading channel. We could have gone out to May, but I really want this thing to expire out of the money. It's really kind of going against us. We've been able to keep rolling it up and out. We've had to add a couple times. It did add a little bit to our margin requirement where our portfolio margin. So it didn't add much, but it did add a little bit. And I considered, as I mentioned in the video, I think it was yesterday, selling a put option, but I'd rather not with the trading way up here. When it gets down here, maybe, but we have a lot of put options we sold in our portfolio. So really trying to keep this as a kind of a bearish type of position where if the market were to go down, then this position will definitely go up in value. And so might offset some of our more bullish or cash secured or covered call positions. So that's SPX. We rolled it up and out, and we'll see how the next couple months play out. All right, then we just bought to close the IWM February 16th 182 put options for 7 cents. Pretty much made all of our money back, so got it closed out a little bit early. IWM has had a pretty nice advance here between yesterday and today. It was up a decent bit. Let's see, it's like around 3.5%. It's a nice advance, and now we have no position in IWM, and we'll look to go back in if or when it comes back down to support. And then finally, EVRG. We bought to close the 2 EVRG February 16th $50 cash put options we'd sold, and went all the way out to June, but got it down to 45, but had to add one more and sell 3 of them. So still a smaller position for us, less than 15,000 worth, 13,500 looks like worth of cash put options. Still have plenty of room to add. I still like the company. Able to walk away with a credit of $120 minus commission. Let's just take a peek at this chart here and you'll kind of see why. So notice that a couple of days ago it found support again around this 49.50 area, but then yesterday it broke through there, and today it had an advance. So we've now made a lower low on this daily chart. So I decided to go ahead and let's just get it down. I don't like trading through earnings, which we're going to have to do now. It's scheduled, looks like, for the end of February here in several weeks. But we did get it way down. You see, it's not even showing up on this daily chart where we got it down to. So here on the weekly chart, notice we got it all the way down here to 45. It's actually below even the lows going back into the fall of last year. It's a better position for us. Unfortunately, we had to go out to June, but I preferred to get it down rather than just rolling it out another month or two and getting a credit. So that's our trades for today, and that's all for this week. I hope you have a great weekend.